Nvidia. We made it through earnings. Initial reaction, despite a really cloudy and noisy quarter and guidance, was higher. Now some of the macro stuff's weighed on it, but all in all, kind of an unchanged move. And I think regardless if you're bearish or bullish, unless you're super long premium one way or another, a win for all sides just to get through that event without a huge volatility event.
Yeah, and I agree with you on that. I think the market breathed a sigh of relief. It allows for the bulls to continue to be in control on this market for now, even in spite of some of the headlines we've heard, as, again, Nvidia was generally positive. What was interesting, or what the chart is telling me, is that when we gapped up on earnings, we spiked right into a downsloping trend line, and it stopped Nvidia right in its path. And since then, we've seen it pull back yesterday, but also pulling back today again. And what's interesting about Nvidia today is that if we look at the price action, the stock market sold off, Nvidia sold off. The stock market is basically unchanged now. Nvidia is still down about 3%. That tells me there's relative weakness there, that there's some profit taking going on. And so I would look for further downside in the coming week on that profit taking, possibly back down. The biggest move down I would think would be back to about 116, and then look to buy that 116 to 120 level.
Considering these setups are comparable, but maybe it's a little bit more compressed with Nvidia, when you compare and contrast the two setups in Tesla and Nvidia, do you look at one as a little bit more favorable than the other?
It's an interesting one because, I mean, with Tesla, it's very news-driven. It's very Elon Musk-driven versus with NVIDIA, it's much more, how many chips are being bought, what's the revenue, what's the general kind of thought process on the semiconductor. So it's almost weirdly enough two totally separate entities. Right. It's not like they're both stocks and you can trade them the same way. In many ways, you have to be more careful on Tesla, in my opinion, because of the Elon Musk uncertainty factor. Yeah,
and when you look at it, NVIDIA, many might say, hey, this is a company that, yeah, I see this chart. Maybe it's a short-term bearish setup, but maybe that just means take off the longs or hedge the position. This might not be one with all the fundamental strength driving this and this growth AI boom that, some might say, hey, long only in many ways.
Nvidia may be the most watched stock in the market, as it's a harbinger for artificial intelligence, AI build-out development. Most of Nvidia's revenue comes from graphics processing units, GPUs, installed in data centers to perform AI workloads. Investors can presume that AI investments are advancing rapidly as long as Nvidia keeps releasing strong outcomes. The first quarter fiscal year 2026 numbers that Nvidia recently released, which concluded on April 28th, were outstanding. Investors need to watch a couple things, though. Is the stock still a good investment today, despite significant headwinds emerging? Nvidia has a market share of over 90% in the data center GPU industry because its GPUs and the software that supports them are the best available. Its dominance is unprecedented in the hardware industry, which is good news for investors. Nvidia is also growing at a rate never seen for a company of its size. In Q1, its revenue increased 69% year over year to $44 billion. However, this pace is expected to slow a little next quarter, with revenue projected to be about $45 billion, indicating 50% revenue growth. The reason for this slowing growth is related to U.S. government export restrictions. On April 9th, Nvidia received notice that it was unable to sell its H20 chips, designed specifically to meet the requirements of previous U.S. export restrictions, without a license, thereby stopping the sale of these chips. As a result, Nvidia failed to generate $2.5 billion in revenue in the first quarter and had to charge $4.5 billion for excess inventory. Nvidia sold over $4.6 billion worth of H20 processors prior to the restrictions. Additionally, they estimated that H20 chip sales in Q2 would total about $8 billion. Accordingly, Nvidia's Q2 growth would have been over $53 billion, representing a 77% increase. Nvidia's growth rate would have been 79% if the $2.5 billion in sales that was lost in Q1 had been recovered. For comparison, Nvidia grew by 78% in Q4, showing that its customers are still spending a lot of money on GPUs and that the growth rate isn't really slowing down. Since government export limitations are the only thing preventing Nvidia from growing this quarter and the following, this is a very bullish indication. The market responded favorably to the news and drove Nvidia's stock up when the company announced its earnings, even if investors didn't witness the huge boost they're used to seeing with Nvidia. Does this, however, make it worthwhile to purchase this stock? Nvidia's trailing 12-month profits per share, EPS metric, will be somewhat off due to the one-time charges associated with writing off the H20 inventory. This effectively renders the trailing price-to-earnings (PE) ratio useless for the upcoming year. Rather, I'll value the stock using Nvidia's projected PE. At 33 times forecast earnings, Nvidia isn't the cheapest stock on the market, but few stocks are expanding as quickly and steadily as Nvidia. Nvidia's core business remains intact and is performing exceptionally well in spite of the obstacles posed by the US government. The demand for GPUs is still high and isn't expected to decline. I continue to believe that Nvidia is a good investment here, and since AI tailwinds are still strongly favoring Nvidia, investors should plan to hang on to their shares for 3 to 5 years. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Implementing declining business in China due to the H-20 ban. As we know, Jensen referred to that as a deeply painful hit, affecting some $15 billion in potential sales of the China market. So obviously, they're not thrilled about that, but it was a long time coming, right? And NVIDIA is also trying to use a lot of momentum in the moment from Trump's overhaul of the Biden era AI diffusion rule, which opens up third markets for NVIDIA to deploy its GPUs while still closing off China. But they're trying to use that momentum to also push for a broader easing of chip controls on China directly. There are just a lot of reasons why I don't think that latter part is going to happen.
Well, and Riva, NVIDIA continues to try to sort of get around these export controls. There's been reporting that it's developing another chip to ship into China, although it did say in a filing today that it might be unable to provide and create that product that would be a competitive one in China. Do you think it does succeed in sort of getting around the rules as it has been?
It's tough. I mean, there is a cat and mouse game between BIS regulators at Commerce on the one hand and NVIDIA on the other. Of course, NVIDIA is going to be the prime target under scrutiny for the design of any potential controls. And so, with this, the kind of variant of the Blackwell chip for the China market, from what we can tell, right, they have designed it to strip down the memory bandwidth by more than half compared to the original H20. They designed this without any advanced CoWoS, advanced packaging technology. So it's a stripped down chip, and it is going to come at a discount, but this is where you also have Huawei with a competitive edge, offering discounted chips that are also going to be at higher performance.
Riva, President Trump right now does seem to be a fan of Jensen Huang. You saw them in the Middle East together. That's a nice place for Jensen to be. I'm wondering how you think Jensen Huang maybe could try and capitalize on that relationship, capitalize on that friendship, Riva.
Well, it's a mixed bag, right? There are a number of tech influencers surrounding the president, and he's hearing from all of them. But there are also lines being drawn, and I think the message here for a company like NVIDIA and others is focus on the ex-China market for your growth, right? Don't bank on that market for your future. That AI infrastructure build-outs have to happen all around the world. Jensen has taken this message globally of this idea of AI sovereignty, and he wants NVIDIA to be at the epicenter of those build-outs. From a policy perspective, the White House agrees and says, this is the time to lock in those AI infrastructure dependencies so that it's U.S. made and designed chips and U.S. hyperscalers that are leading these build-outs globally, but not in China. Right. And so that's the catch here. So whenever you're looking at any one of these tech influencers, there's always going to be some give and take on how far that influence actually goes.
And Rita, speaking of give and take, remind us where you stand in terms of whether these export controls are the right way to go, whether you're balancing effectively driving China to develop its own homegrown industry versus this sort of national security concerns on the U.S. side of shipping these chips in. Kind of where do you come out on that balance?
I mean, there are a lot of folks who will say that, look, it's better to keep Chinese companies dependent on US technology. And so if a company like Nvidia can offer a more superior chip, then let it sell into this market freely. And that the US can then harness that strategic dependence for the longer term, as Chinese companies would prefer the better product. Now, the counter argument to that is that, look, when it comes to China's tech self-reliance goals, those are already working on steroids at this point, right? Where the directives from the state is to any company in China to say, don't rely on or don't bank your future on access to advanced US technology. Assume that it won't be there and do everything you can to accelerate your production towards self-reliance. And you're seeing some really interesting things from Chinese memory chip makers like CXMT, which is not yet on the BIS entity list, but probably will be soon. But they are really driving toward just advanced memory, HBM, trying to gear toward AI development overall. And so this is really a test of China's industrial policy, of whether it's going to apply lessons learned from previous rounds where there was a lot of waste and corruption, and whether these external factors like US chip controls are going to drive more focus, smarter money flows this time around to yield real breakthroughs. But the US chip controls are...
Nvidia just delivered another record-breaking quarter, bringing its stock up 5% and tying Microsoft as the most valuable publicly traded business by market value at the time of this writing. Despite the impressive performance, doubts abound as the company faces rising geopolitical pressure and tariff uncertainties. To decide if Nvidia is a buy, hold, or sell, let's examine the chipmaker's most recent performance and what the present issues indicate for long-term investors. Nvidia announced $44.1 billion in revenue for the first quarter of fiscal 2026, up 12% from the previous quarter, fiscal Q4 2025, and 69% year-over-year. Despite suffering a $4.5 billion penalty owing to new U.S. export limits, Nvidia's net income was $18.8 billion, a 26% rise year-over-year. Highlights include the company's data center revenue, which increased by 73% from the previous year to $39.1 billion in the quarter. In an effort to allay some tariff worries, management also revealed that it will be constructing factories in the United States in collaboration with others to manufacture artificial intelligence, AI, supercomputers. In addition, Nvidia repurchased $14.1 billion worth of shares during the quarter and paid a small quarterly dividend of $0.01 per share, continuing to return capital to shareholders. Notably, the management has spent $40 billion over the past 12 months on share buybacks, cutting its share count by just 0.8% due to the company's large $3.4 trillion market valuation. Tariff twists and turns. Nvidia faced the previously noted geopolitical setback throughout the quarter, despite the fact that it is still breaking records. The U.S. government suddenly demanded on April 9th that Nvidia obtain a license before to sending H20 chips to China. The issue? The company's go-to-market strategy already heavily relied on H2O, which brought in $4.6 billion for the quarter. Prior to the limits taking effect, Nvidia was unable to dispatch an additional $2.5 billion in orders and was left holding the bag on $4.5 billion worth of unsaleable inventory. Nvidia used to see the China market as a stable source of growth, but now it is a major unknown. Nvidia warned that losing access to this nearly $50 billion AI accelerator market would give foreign competitors a big advantage. Just after Nvidia released its fiscal Q1 earnings, another twist happened. A federal court stopped President Donald Trump from using emergency powers to impose broad tariffs. The decision, which the Trump administration plans to appeal, may ease trade tensions for now, but it shows how quickly trade policy can change and slow Nvidia's unprecedented growth. Nvidia's Blackwell is its next growth driver. Nvidia keeps innovating in spite of its geopolitical troubles. The company's next big breakthrough is its Blackwell chips, which are designed for massive-scale AI workloads, said CEO Jensen Huang. In its most recent quarter, the firm introduced NVIDIA Dynamo and Blackwell Ultra, which are intended to power the upcoming generation of reasoning AI models in order to sustain its growth. According to Huang, there is a huge demand for NVIDIA's AI infrastructure worldwide. The demand for AI computation will increase as AI agents become more widely used, and the output of AI inference tokens has increased tenfold in a single year. NVIDIA is at the forefront of this significant shift as nations all over the world acknowledge AI as vital infrastructure, much like electricity and the internet. In April, Nvidia declared that it would manufacture and test these chips in Arizona and its AI supercomputers in Texas to assist the development of its Blackwell product. It's improbable that management decided to manufacture the company's newest product in the United States, given its tariff fears. For the upcoming quarter, management anticipates revenue of $45 billion, give or take 2%. Notably, continuing H-20 restrictions will continue to affect gross margins, resulting in an $8 billion hit to that outlook. Management anticipates achieving mid-70% gross margins later in fiscal 2026, which would be comparable to its 75% gross margin in the previous fiscal year, excluding the estimated $8 billion loss. Should I buy, sell, or hold Nvidia? Despite its explosive growth, Nvidia's stock is still trading at a hefty 45 times trailing profits. With a median price-to-earnings ratio of about 63 over the last 3 years, the company has, however, largely grown into that premium. Nvidia, a certain leader in the rapidly evolving field of artificial intelligence, keeps setting new standards, most recently with its AI supercomputers and next-generation Blackwell processors. Despite geopolitical dangers and a high valuation multiple, Nvidia is still an intriguing long-term investment for growth-oriented investors looking to gain exposure to revolutionary AI technology. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
So did we. So what do you make of Nvidia and particularly the China situation?
Yeah, I mean, I think overall you've got to be pretty optimistic where Nvidia is sitting right now. I mean, the guidance, I mean, the results in itself are perfectly fine, solid results. The guidance, you know, when you kind of try to dissect it, I mean, you alluded to the $8 billion in lost revenue there from China, which essentially indicates that the non-China business is running well ahead of expectations, because most of us we're looking at about a $4 to $5 billion hit for the July quarter tied to China. So the fact that you're likely running a couple of billion ahead of expectations in China. As far as China itself is concerned, listen, I think what you're getting here now is almost a de-risking of China in the fact that, hey, listen, you would have been potentially $8 billion above the current run rate, but the fact of the matter is, you now don't necessarily need to worry about another leg down driven by China. And in fact, if we were to see some sort of good news, and we don't think Nvidia is going and Jensen is going to give up on China, so we would expect them to at some point find their way back into China. Once they do, that is a potential catalyst for the shares.
Angelo, I know you got to buy on this name, but when you're talking to your clients and they ask you, hey, what are the key risks I need to think about before committing capital to Nvidia? You tell them what, Angelo?
Yeah, I mean, there's a lot of risks that are still on the table. I mean, I'd say right now, there are still geopolitical risks that you still need to take into account, tariff-oriented risks. I mean, we do have a pending 232 semiconductor investigation that is going on at this point, where we expect to get some clarity on it here over the next couple of weeks or months. Once we get further information on that, there is going to be a tariff, right, on technology products out there, on the hardware side of things. Nvidia largely now is hardware oriented in nature. We think they're going to be able to obviously pass through a lot of those costs, but nonetheless, it is a potential headwind that's looming out there at some point in time. But still, we need to find out and get some clarity on that side of things. I'd say the other thing, when we look out here over the next couple of quarters or years, the trajectory of AI demand, I think was more of a concern maybe 2 months ago, but nonetheless, we're seeing a lot of supply growth in terms of extra compute capacity getting added into the market, not only from the hyperscalers, but from these tier 2, 3 providers, whether it be the CoreWeaves, the Stargates of the world. And if we would get to a point where that capacity, that supply growth exceeds the demand growth, that clearly becomes worrisome for the AI trade. But I don't think that's something you necessarily have to worry about here clearly over the next couple of quarters, especially given what Jensen just talked about in terms of the emergence of these reasoning models, what they're doing with AI agents and the demand that's providing for compute here.
So one of the questions I have is in terms of some of these other areas that you just were referring to, to counter Josh's question, what are some of the positive things that you're telling people who are calling you that you're seeing? You referred to some of those things, but what are the other growth areas? Like one of the things we were talking about earlier is the fact that, we're really not seeing anything on the robotics side just yet from a revenue perspective. I think there's some other opportunities out there. Any other things like that you're seeing that you think are positives?
Yeah, so I think when it comes to AI, you've got to walk before you can run, right? I mean, you look at 2023, 2024; those were kind of the years of Gen AI. You've now got this inflection here in 2025, which we think will spill into 2026, which is kind of this shift towards AI agents, more complex reasoning models. And I think 2027, 2028 will be the bigger opportunity and massive wave in terms of the physical AI world. So you'll probably see some signs of that, obviously, here over the next year or two. But the greater momentum, we think, is probably 3 to 5 years away in time. But nonetheless, there are clearly catalysts, towards the growth of compute out there. I'd say also think about sovereign AI more and more nowadays, especially after the Saudi Arabia deal that we just saw. I think you're going to see a lot more deal making here over the next couple of quarters, and I wouldn't necessarily, be surprised if you saw more Nvidia, in some of these deals that get announced out there in terms of being used as a bargaining chip. And that's clearly going to be a potential catalyst for a company like Nvidia and the broader AI ecosystem.
Despite widespread worries about industry headwinds, Morgan Stanley maintained its top selection, describing Nvidia as a unique opportunity in the semiconductor space and reiterating its overweight rating. We continue to regard this as a special opportunity, Morgan Stanley analysts stated in a note. While there is still a lot of concern, almost universal, that things will slow down, the world's largest market cap semiconductor manufacturer is arguing forcefully that things will pick up speed from here. The latest Nvidia findings were impressive in a number of ways. The analysts predicted high gross margins, robust ex-Chinese revenues, networking recovery, and encouraging remarks regarding the supply chain ramp on racks. Morgan Stanley attributed this constraint to geopolitical sensitivities around China, even though there was little forward guidance for the second half of 2024 or the calendar year 2026. The analyst stated, "We continue to believe that we are materially under-shipping demand. It is anticipated that a major short-term issue, that rack bottlenecks are causing original design manufacturers, ODMs, inventory to increase, will soon be resolved. As rack constraints are removed and demand increases, the inventory that is building up at the ODMs will shortly be replaced with a limited number of those Bianca cards." As part of a weekly evaluation of semiconductor names, Morgan Stanley has maintained its belief in Nvidia. The business also likes Marvel a bit more given the sell-off and expects good numbers from Broadcom this week. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.